on News9 where we bring to you the morning buzz on the Lal Street. It's a Thursday morning and the stock markets, they have opened in the green. The headliners are trading with gains of about 0.5% and the broader markets, they are doing even better. Both mid and small cap indices are trading about 1% higher. The big question now, of course, is this just a dead cat bounce considering we have been on a bit of a skid lately, or is the worst over? We'll get to it in just a bit. For now, let's first start with what we got in terms of a handover from the global markets. On the equities fronts, the things are looking not great. Even now, the Wall Street is on a 4-day losing skid, with S&P 500 now extending a drop from its all-time high to more than 4%. The broader 500 stock index is currently around that 5,020 mark, and Nasdaq that has dropped by over 1% as well. The Chinese markets overall, they are doing better. Hang Seng, the Hong Kong market, is up 1% as well. But you may wonder why we are seeing this bit of a correction play out in the US markets. The comments coming in from the US Fed is the reason. US Fed Chair Jerome Powell signaled this week that policymakers will perhaps wait longer than previously anticipated to cut rates following a series of surprisingly high inflation readings. The markets, they are looking at it as a hawkish pivot from the Fed chair. Remember, Fed officials had penciled in about 3 cuts in the forecasts that were published last month, but investors are now only factoring in 1 to 2 rate cuts this year. So that is perhaps why we are seeing markets turn slightly cautious globally. And considering that we have seen a correction in the broader markets, one would expect and especially the commentary coming in from Mr. Powell, that the bond yields that will spike, which it did, by the way. The 10-year shot up by about 8 basis points to 4.66%, which was a fresh 6-month high on Tuesday, but yesterday it came off by about 8 basis points. So effectively for us, it's flat at 4.59%. The dollar index also cooled off and it's currently below the 106 levels. And I think interestingly and somewhat surprisingly, oil prices, they have declined by a good 3% in the last 2 trading sessions. Brent crude is now hovering somewhere around the $87.5, $87.6 a barrel mark, and it looks like lack of news on the geopolitical front is being perceived as good news by the market. So we are seeing a good decline in oil prices as well. But back home, a healthy start to the day of trading, which by the way is also the weekly expiry for Nifty contracts. But let's circle back to the question we began this show with. Is it a dead cat bounce or is the worst over for the market? To answer that and more, we have Akshay Bhagwat of JM Financial joining us. Thank you for joining us here on News9, Akshay. A good start to the day of trading. Nifty has managed to open above the 40-day exponential moving average, which was at around 22,200 odd levels. What's your sense of things now? Is this just that a pullback, or do you think the worst is over?
Good morning, Suyash. Well, it's the geopolitical tensions which are playing heavy on the market, and volatility has picked up significantly. Now, the question is, where does this market bottom out at the current scenario? So if I were to see technically, the picture signals that 22,000 basis spot Nifty plus minus 50 odd points, that's a very strong support for the Nifty index. And today being the weekly expiry for the Nifty, the opening itself is suggestive that we did show a positive trades post the gap up opening. There is a bit of a sell-off, so volatility will be there as we are entering into the expiry week. But the broader sense is that, there will be some bit of a recovery attempt near the 22,000 mark. So the trend is still intact, though the recent trading session has seen some bit of a pain. 21,800 positionally is one level you need to keep in mind. Till those levels are held, the levels would act as a very strong support zone from the next 8 to 10 trading sessions, and that will be the test for the market whether they manage to hold or not. My assumption or going by the data points is that before the expiry week, you will have some recovery coming in. Maybe that happens today itself or from the 22,000 mark. But my sense is 22,400 to 22,450 would be a bounce which you can look forward to. So yes, volatility will be there. Market will try to search and find a bottom around the 22,000 mark. And the sense is that there will be a recovery on the cards as we enter into the elections from 16th of April.
All right, and we are seeing, we have actually corrected from the day's top. In fact, both indices, Nifty and Bank Nifty, are pretty much have wiped off most of the gains that came in the morning. And Nifty Bank, I mean, we are around that 20-day moving average. That's where we closed. We managed to reclaim that on Tuesday. Even this morning, we went up as high as 47,800, but now we are back down by about 300 points from the intraday high. Is Bank Nifty again going to play a spoil sport, Akshay? What's your sense of things over there?
See, the theory is that the parameters from a trading perspective is a bit oversold. So technically, as you rightly mentioned, some moving average support will get to the rescue. Also, if considering the monthly expiry next week, there is a good chance that the market will make a recovery attempt. Also, if you look at the prior history, whenever there has been a war-like situation, be it Ukraine or Russia in 2022, or as a matter of fact, between Palestine and Israel 6 months back, the immediate pain post the event has seen a correction in the next 3 to 4 sessions. But whenever the recovery has happened after such events, it has been tremendous. So the expectation is that the markets should reverse. Even as a matter of fact, Bank Nifty is in the search for a support. As we are trying to come out of that pain point, there will be some bit of volatility, but broadly the sense is that support of 47,000 for the Bank Nifty would be an important zone if you are a short-term trader. And yes, there will be a recovery, and the immediate target for this recovery would be 48,000. That's the first resistance I have, and the key resistance would be 48,200 to keep on your mind. So yes, be ready for a recovery in the indices, whether it's a dead cat bounce or whether it really matures into a strong recovery. That we will have to decide as how the volumes and news flow plays out in the next couple of days. But a recovery is on the cards.
All right, recovery is on the cards for both Nifty and Bank Nifty. And for Bank Nifty, 47,000 support should hold in the short term. But the earnings season is on. Among Nifty 50 companies, we have Infosys, Bajaj Auto, HDFC Life Insurance that are expected to report their fourth quarter numbers today. Let's start with Infosys. India's second largest IT company is likely to witness a revenue decline for the second quarter in a row, while margins and profits are expected to increase marginally, aided by operational efficiencies and lower on-site expenses. Revenue is expected to decline by about 0.5% quarter on quarter in constant currency terms, and it's expected to come in at around 38,640 crore versus 38,821 crore in the previous quarter. Infosys's profit after tax, which is PAT, is likely to go up by over 1% sequentially to 6,180 crore from 6,113 crore earlier. Margins are seen growing up by a modest 20 basis points, coming in at 20.7% in the quarter under review, and EBIT, which is earnings before interest and tax, that is seen coming in at 7,995 crore, which is about 0.43% higher from the previous quarter. I mean, there are multiple things that we'll also need to watch out for in the Infosys number. The numbers, of course, I think broadly most of us are expecting them to be muted, but the guidance that Infosys will give for the financial year 2025 will be closely tracked by investors and analysts, as it would set the tone for the entire fiscal. Most brokerages are expecting Infosys to maintain its revenue growth guidance in the range of 2 to 7% for financial year 2025. They also expect Infosys to maintain its operating margin guidance for the current fiscal in the range of 20 to 22%. The IT giants hiring in the last quarter and the plans for current fiscal year will also be keenly tracked given the decline in net headcount for the fourth straight quarter in the October to December period. Remember, the company had also announced a hiring freeze at campuses last year. Other parameters that the street is likely to track will include Infosys's outlook on spending and discretionary demand its artificial intelligence deal pipelines as well as announcements related to buyback or special dividends. Akshay, I'll come to you now. Infosys is in a bit of a rough patch. I mean, it has been in a rough patch since early February, has declined about 20% from its peak, and on Tuesday it was a top loser among Nifty 50 stocks. It is in oversold territory, Akshay. RSI is below 30 now. So do you see a pullback if the results are good? And also, what if they are bad? How much more can the stock correct from here on?
Yes, you rightly mentioned Infosys is in a rough patch. In fact, from 1720, the sell-off has been more of a one-way declining trend right up till 1420 odd levels where we closed on Friday. And if you look at the broader trading parameters still in the futures and option segment, there is a lot of short positioning which I see is Infosys. Today, the start has been a bit better considering the fact that results are there. So there's a bit of short covering as I see. Now the question is, will there be a pullback or will the slide would continue? Technically, still it's a weak trend. Yes, as you rightly mentioned, the RSI is below 30. There are signals that oversold parameters may eventually give way to a slight bounce back theory. But considering the given parameters right now, even if there is a bounce back, it has to be a mild recovery. So right now, considering oversold parameters, my expectation in Infosys that it might be confined in a range where the upper end of the range at the best can work out to 1480 on good set of numbers or even some bit of a positive news flow post the result front. Now, if the results don't go as per expectation, then where do you see Infosys? Technically, the strong support is placed at 1360. So that's a very strong value area on the price charts. And my sense is that if in case those levels are hit, that would be a screaming buy for Infosys because those are good trading parameters where you can consider taking a buy point. So the sense is a moderately bullish view in Infosys. Expect some bit of pullback from current levels. 1480 is the best case scenario you can look at on the upside from a short-term trading perspective, and on the worst case downside 1360 would be the level to buy on dip in case the post results the stock offers you that opportunity.
All right, 1480 on the upside, 1360 on the downside. That's the call on Infosys for the short term. But moving on, Bajaj Auto is another company that will report its numbers today. The numbers should come out by noon of, today. And the company is expected to deliver another strong quarter backed by margin expansion and strong volume growth. Revenue is likely to expand by 25% year on year to 11,118 crore for the quarter under review compared to 8,904 crore in the year ago period. EBITDA, which is earnings before interest, taxes, depreciation and amortization, could increase 28.8% to 2,211 crore in the March quarter against 1,716 crore in the corresponding quarter. Operating margin shall increase by about 19.3% versus 19.8% in the previous period. 19.8% this time versus 19.3% in the previous period. And profit after tax, that could increase by about 30% year on year to 1,870 crore. Among key factors to track will be total volumes that are likely to have gone up by about 24% year on year to 10.69 lakh crore versus 8.6 lakh units. As for the stock, I mean, Akshay, it has been a tremendous wealth creator. It has increased investors' wealth by about 110% in the past year alone versus about 22% rise in Nifty. Even earlier this month, I mean, it was at a record high of 93.56, but since then it has declined by about a good 4%. And I mean, is it the right time to buy considering it has come off its peak?
Yes, charts are suggestive of a strong price setup. If you look at the last 5 to 6 trading sessions, it's been a cool-off phase for Bajaj Auto. Not much of a correction the way the market is volatile. A slight dip of 50 odd points is what we have seen. And the charts are still suggesting that, 9,500 targets can be on from the short to medium term perspective. So 8750 is a support zone. I'm still positive on Bajaj Auto till the levels of 8750 are held on, and in case the results turn out good and in case you have a breakout of this consolidation zone, the breakout level would be 9150 basis spot. If that breaks out, expect strong momentum surge which can see the stock testing the target areas near 9500 in the short term scenario.
All right, Bajaj Auto may go up as high as 9,500. That's the word coming in from Akshay Bhagwat. Sir, thank you for giving us time here on News9. Always great insights from you. But with that, it's time to slip into a short break. But stay with us, as on the other side, Rohit Srivastav, founder and market strategist at IndiaCharts.com, joins us.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
The football is mother of all games.
It is a team sport.
The leadership attitude is taking the ownership.
It's always a big responsibility to take decisions and the right decisions.
I always question the stereotypical.
And that's why you are in that position.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Take here on News9, and the markets, they have actually come off from their intraday highs. Nifty has come off by about 60 points, and essentially we are, at where we were at the start of the session, where it was Nifty was at around 22,210 odd levels. Sensex is also, up about 0.18%. As of 10 a.m. this morning, it's holding above the 73,000 mark for now. But the broader markets, they have also come off slightly from the intraday highs, but both are still hovering, pretty much holding on to the morning gains. Mid-cap index is up 0.75%, and the small cap index is up almost 1% this morning. But again, the big question remains that, this bounce we are seeing, is this a dead cat bounce, considering we have been on a bit of a skid lately? Before today's session, Nifty had corrected by over 600 points or 2.66% from the peak. So that remains a tall order for us, and also considering what's going on the political front as well, with the tensions in the West Asia. I mean, for the last couple of days we have not heard much, and that I think is being perceived as good news by the markets, and because of that we have seen some bit of a retracement in oil prices. They have come down by about 3% in the last couple of sessions. Brent crude as we speak is hovering around that $87.5 a barrel mark. But joining us on the show now is Mr. Rohit Srivastava, founder and market strategist at indiacharts.com. Sir, thank you for joining us here on News9. A lot of uncertainty is still looming for the markets. We have what's playing out in West Asia with Iran and Israel. I mean, pretty much it looks like things could escalate over there. For now, they are at a standstill, but both sides have indicated that, I mean, Israel has said that it may retaliate, and Iran has said that it won't hold back either. Also, we are hearing a bit of a pivot from Mr. Powell as well. His recent comments are increasingly, sounding more hawkish. We were expecting about 2 to 3 rate cuts. Now the idea is, I mean, maybe 1 or 2 or none at all this year, sir. What's your sense of things, and how are we positioned currently?
I think it's very difficult for him to really cut rates. I think that's something that we've been saying since January, because bond yields are actually going up. A lot of people think that the Fed controls the bond market, but if you really look at the history, it's the bond market that controls the Fed. In other words, they simply follow the market. If bond yields are rising, 3 to 6 months later, you'll find them raising rates. And if bond yields are falling, 3 to 6 months later, you find them cutting rates. What they can do is use language as commentary, which is sort of what they were doing in between by talking about, cutting rates. They were probably hoping that bond yields would fall. They did for a while. Between October and January, but after that they started to go up. Now the market continued to listen to the idea that rates will come down, and so they continued to rally throughout this period. But we have been seeing it as an ending structure, at least as far as the Nifty is concerned, because in Nifty, while we've made higher highs, the progress has been very, very limited. I think certain stocks may have done very well, but the index itself has not done that well. And the weekly momentum indicators on the Nifty also remain in sell mode. So in general, I think the trend is, in line with what world markets are doing, which is they are paying attention to the idea of higher rates from here. So they remain the same, or they could move higher. My sense is they eventually move higher, not even lower. So that risk has to get priced into markets, which has not happened. But the momentum indicators do indicate it will happen, because they are all in sell on weekly levels. If you look at, whether it's the S&P, Nasdaq, or the Nifty 500, the weekly momentum indicators are on the sell side, and that I think is what we are seeing playing out.
All right, considering that technical indicators are on the sell side, and you just mentioned that markets have not yet priced in a higher for longer interest rate regime in the US. Considering, I mean, what would be the worst case scenario if the things do move the other way? We remain in an elevated interest rate environment, as well as the situations, the tensions in the in the Middle East, they worsen. What would be the worst case scenario? Where can and how much by Nifty will fall?
So right now, I'll put the first major support at closer to around 21,122, and that will be a level where we will try and consider, is this the worst case, or is it going to be worse than that? Once we break that, then we'll open up scenarios that are much worse. But in my mind, I would be prepared for the possibility, but it is an important support. We have seen similar support hold even in October, so we'll pay attention to it. So 21,100 odd for the for the Nifty is what should really be the downside we should be prepared for as of now.
All right. I mean, that's about 1100 points from where we are currently. So big crash could come our way if things do decide, I mean, things move the other way. But so interesting move on oil prices. They were edging higher. We were above $90 a barrel when we left off on Tuesday, but 3% decline in the last 2 sessions. We are currently above around that $87 a barrel mark on Brent crude. What do you think led to this 3% pullback in crude prices? Is the market, the lack of cues coming in from the Middle East that the tension is not escalating over there, is that being perceived as good news by the market?
It could be because probably you have, see, for example, you haven't really seen an oil spike even when these recent events happened, right? You didn't see prices go beyond the high that we made on the 5th of April, which was closer to around $87.63. We've remained below that throughout this period, despite all the negative news. So surely there was already pressure for some reason, and geopolitics is probably not the main driver as of this moment. But we are back to support. If I simply look at the trend line from the bottom that we made in February, we are at that support, which is closer to around $82.5. So now, if we hold 82.5, I would sense that the uptrend actually resumes in oil. So it may just have been a temporary technical correction. It's true that maybe no negative news has led it to pull back to the bottom end of the range, but it has not really broken the overall upward trend that it has been in for the last 2-3 months. And so that is why I would still think that oil prices are headed higher.
All right, oil prices could be heading higher. What we are seeing may be a technical pullback, but Brent crude is currently at around $87.5 a barrel. But we'll move on, and just wanted to pick your brains on the earnings season. We are in the middle of the earnings season. What are your expectations? A better quarter this time around, considering that inflation has, at least for us, come off nicely?
So there's a steady slowness in growth rate, but growth continues. I mean, we were at over 30% growth for Nifty in the September quarter, then it slowed down to maybe 24%, and then this quarter will be further slowed down to maybe 18% maybe. But you continue to see positive growth. The problem in our market is not growth. We've seen consistent growth at an aggregate level. The problem really is whether valuations are right or not. Have we priced in all the growth for the time being, for the next year or year and a half? I think that is the issue with many sectors, and specifically that becomes more highlighted when bond yields go up, right? Because interest rates are a very important factor when you do valuation metrics. That if you have interest rates very low, your discounting factor becomes aggressive, and therefore you pay a higher premium for stocks. Whereas if interest rates are high, your discounting factor is more, much lower, and you pay a lower premium for, value. So that I think is something that we have not really fully adjusted to, because valuations around the world are still based on the previous regime of near zero interest rates. There was some correction to that front in 2022, but since we've gone past the highs of 2022 now, that's sort of gone. So that process that had sort of started is again on the back burner, and I think that is the risk when you're seeing rising bond yields. The risk is that you get a valuation correction, not a growth correction yet at this point.
And I mean, just one last question from me. IMD and SkyMed, they are projecting a better monsoon for calendar 2024. I mean, that has been a problem, considering that rural demand and rural consumption has been a big pain point for Indian markets. With this, do you expect a turnaround over there, rural consumption and demand, sir, if the monsoon is indeed better?
Yeah, it's a tough one, because you can increase income, but have you also increased the cost of living, which then eventually results in whether you spend more or not. So it's a very thin line when it comes to rural income. But you do get out of 9 out of 10 monsoons actually end up being good in India. We do look every time in that direction, just in case there is any risk to markets from the agri side. But in general, I think we've seen so many years where it's generally positive. So I don't know beyond that what more to say. So it's at least not a sentiment spoiler as of this moment.
All right. Interesting takes on a slew of topics that we discuss here. But thank you for giving us time here on News9. So always a pleasure speaking with you.
Thank you.
Before we wrap things up, let's look at how the markets are doing, because Nifty has in fact fallen to very close to its day's low. We have broken below 22,200 mark on Nifty. Currently we are up about 0.18% on the index. The low of the day comes in at around 22,175. So we are just about 13 points higher from those levels. Sensex is still holding above 73,000 mark, but we have again seen a big decline from the day's high. The mid cap in the broader markets overall, the small caps, they are about trading about 0.5% higher. Again, we are seeing some bit of a pullback from higher levels. So I mean that overall the texture of the market, I mean one needs to really look back and see where we are currently placed. I mean we are on a bit of a skid in the last 3-4 sessions. Nifty has fallen significantly from the top. It is down by about 600 points from the the record high levels. So this pullback, can we really trust it? I mean, it looks like it's a technical pullback, because remember, because of this sharp correction that we have seen in the last 2-3 sessions, the technical indicators, some of them are in the oversold zone. For let's take example, RSI, which is relative strength index, it has fallen below 30 level. So it could be that the markets are seeing some bit of a technical pullback. But remember, the trade overall is going to be choppy, because we are in the middle of the earnings season. So a number of companies that will report its numbers, they will have individually impact the markets. And also today is a weekly expiry for Nifty contract. So a lot of repositioning could be taking place, but 22,200, I think that's the key for us to hold. That's where the 40-day exponential moving average for the index is. And if we are able to close about 22,200, I think from there the markets could see another 100-150 point pullback. But if that is if you don't close above those levels, we could see a much broader correction. And on the downside, of course, the first the low of the day that you need to track for support level would be your 22,117, which is again the 61.8% retracement level of the most recent rally we have seen, from about 21,710, which was March 20 low, to the record high of 22,775. So that is a 61.8% retracement level, and that also is a January record high level for the index. So keep an eye out on that. 21,117 is a big level that should the market should hold in the short term. But with that, it's a wrap on this edition of First Take. Thank you for watching. We'll see you at 4 p.m. on Last Take.
India's ever-evolving urban landscape is witnessing a new revolution. And this one